Let me now bring on board my live market guest, Mehboob Irani and Deepak Moni. Gentlemen, good evening to you. Thank you for joining us. Deepak, it seems like a bottomless pit for Indian markets, and now we have a sub 4900 print on the Nifty. Where do you think is the near-term trading bottom for our markets?
Well, tough to predict that because the market is unpredictable in that manner. But this is a decline that has been going on for quite a while now. It's been several weeks. So given that, even for a bear market, intermediate downtrends would tend to run maybe a couple of months. Typically, this is done about that. So I think one would play this trend on the downside, but keep a lookout for the reversal whenever it comes. And the first indication may be signs of individual stocks reversing. And I may add there that this is not really happening just now.
Mehboob, now there is no mystery in why Indian markets or global markets are correcting. We may use fancy phrases like risk off or flight to capital. But the bottom line here is that there is a serious increase in global risk premium, and which is having impact on Indian markets.
Yeah, that's true, Nikunj. I think a lot of things have happened in the last 15-20 days which not many were discussing. Like who was discussing amongst us over just about a month ago that there is a distinct possibility Greece will go out of the Euro Union. It all started with the Greece elections. Then we had something which I call it very, I don't bother about it personally, but the market is really concerned about is the IIP numbers, the inflation numbers. So all sorts of negative things are coming together. The fact is, I personally feel, and this is my feeling, that the market is ripe, that traders should go and buy and make a buy trade in this market. We have Dow coming down 9 days in a row out of 10, the last 10 trading sessions. All this negatives possibly market is talking about. There's not a single person on the street who is ready to talk positive. But the fact is, I feel that people should be buying individual stocks, and quite a few stocks have come down to levels where in a trade you are going to make money certainly. When I'm saying trade, I'm not saying one should get married to the stocks. Like look at Yes Bank at 302. People liked it at 350. Look at HDFC, the way it came down just because the weightage was reduced by MSCI. This type of stocks, if you buy today, you're going to make money in the next 24 hours or maybe in the next 24 days, certainly.
Let's look at some more stocks which captured all the headlines today. So BPCL was in news. CLSA, they have upgraded their price target for BPCL. They feel that BPCL is interestingly positioned to capture the global E&P upside. Piramal Healthcare, they have acquired one more company. Market men are of the view that Piramal Healthcare now is putting their cash to work, and which in the near term will create shareholder value. And the MSCI impact was clearly visible on HDFC. HDFC today, like Mehboob indicated, cracked, but it did manage to recover smartly from the day's low. Some other losers now. Now this is the danger zone, which is today's selling was largely led by financial stocks. They bore the brunt of today's selling, and the profile of stocks which collapsed or corrected today, they are largely dominated by foreign institutional investors. So I worry about this trend because so far foreign institutional investors have pumped in about 40,000 crore this year, and if they pull out about $1 billion or plus in the month of May or in the month of June, then we could be staring at some more downside. Metals also a weak link in today's market. Tata Steel, JSW Steel and Hindalco also. Just to recap that MSCI impact, Kane appreciated in a falling market. Godrej Consumer had a decent day, 532, but Suzlon corrected by another 2%. That makes it sub 20 rupees now for Suzlon. Deepak, what do you make of today's selling in financial stocks?
A continuation once again. It's not that they have just cracked today. They have been bearing the brunt of the decline for quite some time. Not many of those stocks have gone below the December lows, that has to be said. I think Bank of Baroda is one of the exceptions which has gone below the December low. But as such, the group is holding out above December, but last 1 month or so has been pretty bad for them.
Let's look at some more data, and then I'll get Mehboob to comment on this data. We've looked at major emerging markets and how they have moved this year. So if you look at the YTD performance, Indian markets, I'm looking at Nifty here, is up 5%, followed by China, which is up 6.6%. Russia is the worst performing market, which is down 1%, and then South Korea is flat. It is down. It is up by only up by 0.75%. But if you flip it around and interchange the headline with currency instead of equities, Indian rupee has corrected, and it has been one of the worst performing emerging market currency, followed by the Chinese currency. If you look at Korean won, it's down by about 1%, but Russian ruble, even though commodity prices have corrected, oil still accounts for 60% of the Chinese of the Russian GDP. The Russian ruble this year has appreciated by 4% against the dollar. Merbun, your comment on how emerging market currencies have moved this year?
I think it's true that Indian rupee has been the worst performing currency, and that is a major headwind as far as India is concerned. As far as Russia goes, I think the fact of the case is that it's a country which depends too much on commodities. Commodities prices are cracked. But if I am not mistaken, I think Russia doesn't have much of a deficit problem right now. So we have a problem of current account deficit, we have a problem of fiscal deficit right now, and I think if we take our gold from this current account deficit, for all you know, our current account deficit is hardly 1.2, 1.3%. So if gold is put as a part of the capital account, then we are talking of why should the rupee be at 54, 54 now? I personally feel, Nikunj, that currency is basically one of the most volatile things to happen. And I think whatever is happening globally right now, it's a major balancing act being done right now as far as various currencies goes. And you rightly mentioned it. Most of the currencies are weak right now against the dollar. There is a flight of capital, a phrase which you used earlier, and people are moving to the dollar. The dollar is strengthening. It's true India has got its macro problems, I'm not saying no, but somewhere along the line, according to me, as far as the markets are concerned, everybody is talking negative, and all the negatives now are getting discounted somewhere, which is making me feel more and more convinced that somewhere along the line, we are going to look back and say, this was an opportunity which we missed out because we were discussing things only for the next 2 or 3 days. Okay, things will fall further, things will fall further. Why doesn't somebody wake up and say, okay, HDFC at 620, is it going to go to 520 or is it going to go to 720? If 620 is going to become 600, so what? We cannot buy at the bottom, we cannot sell at the top. I'm ready to lose at 20 rupees if you tell me I'm going to gain 100 rupees over the next 6 months or 1 year. That's exactly the way the viewers and the investors should be looking at the markets right now. I somewhere feel there is an opportunity in select few companies which otherwise are fundamentally sound, have a good business model, good management, not tainted in any way, and where the downside now is limited. Go and make a calculation and say, okay, fine, if it comes down, I'm losing this much. If it gains, I'm getting this much. I think the risk reward is turning towards reward. And earlier also, I think Nikunj passed a remark, which I need to say that, yes, according to me, the way money has gone into debt, into gold, and into real estate, I think it's a matter of time, maybe the next couple of quarters or 3 quarters or 4 quarters, where I feel the shift will go back towards equities. So investors need to be patient if they are going to buy right now. Things are against them. But at the end of it all, I think over the next 2 years, you will realize that this possibly could turn out to be a buying opportunity.
Fortunes are always made in equities if you sell greed and if you buy fear. And historically, such kind of pricing environment or price action always leads to a crop of new opportunities. But since the technical strength is not in your favor and there is clear momentum on the downside, you have to pick up select stocks like Merbun indicated and then wait for the technical picture or wait for the global fear will subside. Because if you don't start buying now, when markets will recover, you pretty much would be sitting on the sidelines and you would be regretting why is that you did not put your money to work. But the question we are asking on this edition of Markets Tomorrow is slightly technical in nature, and the question is, rupee today touched a new all-time low of 54.4 against the dollar. Deepak Mone, look at the rupee charts. What's your sense? Do you think rupee will crack below 55?
Well, I mean, the US dollar itself, if you take the USDX, that has been really shooting up in this month. It's gone up from 79 to above 81, a 2% rise, and that is in such a short time is unusual. I think the rupee is a little bit a victim of that, except that the rupee has been falling since February nearly. So it's a slightly longer trend, and right now I think we are probably getting the worst of it because of this last 1 month strengthening of the dollar. So, but this sort of a trend tends to correct itself pretty quickly. It doesn't persist for a very long time. So I wouldn't really say that the rupee is going to be this way for several months in a row.
Merbun, was it just JLR which was the root reason behind today's price damage in Tata Motors?
I suppose so, Nikunj, and I think we need to accept the fact, and that's exactly what I was stating. You need to identify the good stocks. And if Tata Motors is a stock which you want to acquire, you need to just look at one thing, that 9 out of 10 brokerage houses or research houses, if not all 10, were positive on Tata Motors. And if there is any sort of glitch anywhere happening, like it happened in the global sales numbers, there was disappointment. There could be a sell-off which may happen. Now a 285 or 290 of Tata Motors, if it comes to a 255, am I a buyer? If it comes to 260, am I a buyer? That you need to define. And allow me to state, Nikunj, any negative news could give you an opportunity, or a market, what we saw today, could give you an opportunity, like what I was mentioning in cases of Yes Bank and HDFC type of stocks. So even Tata Motors, I think, considering the fact that most of us were very positive on the stock, and the stock has outperformed by a wide margin if you see it on over a longer period, I think the sell-off which happened today honestly has not surprised me. The question is, should I buy into the stock right now? I have no doubt of the fact that Tata Motors will be ruling much higher over the next 12 to 24 months. But I will allow the stock to settle down, and maybe if I see a 255 or 260, 265 coming in the stock, possibly I'll go and buy, considering the fact that I am a strong advocate of the fact that people should be buying the right stocks at the right price.
Deepak, for a trader, do you think Tata Motors now has reversed the course? About 10 days ago, it was a must buy on every decline. Now, do you think it is a sell and more like a must sell on every uptick?
Well, a 7% fall, what it got today, is very unusual for the stock. So that kind of decline is unlikely to repeat itself. And there are other stocks which are, consistently losing 2-3% every day. So from that point of view, for a short-term trader, there are better short sales around. This was a one-off today, I would suspect, and you wouldn't get that kind of downside momentum going ahead. For long-term investing, nothing has changed very much. It's well above the 200-day moving average. It's the relative strength-wise, if you look since the beginning of this move, December move, it's way above that. So those parameters are unchanged. This is just a slightly sharper correction going on right now.
Jubilant Foodworks, 1179 for Jubilant Foodworks. Looks like investors cannot have enough and more of that stock. Jubilant Foodworks is now marching towards a new all-time high. 28 rupees up on a day when market conditions were choppy, things were all over the place, there were no buyers. Jubilant Foodworks closed almost at the highest point of the day. Meherbun, why?
I think I always fancied that stock, Nikunj. You know that. Stocks like Delta Corp, Dish TV, Jubilant Foodworks, even a Cox and Kings are stocks I like because I like businesses. And I personally feel this business is very much intact. Unless you have foreign competition which will come in and hit at pizza market. I think Jubilant Foodworks should have a smooth sale. But again, coming back to what I had stated earlier, at 1170, will I be a buyer? Answer is no. I think honestly, over the next 2 years, there's going to be no dearth of bad news as far as India is concerned. And market will consistently provide opportunities to people to find good quality stocks, sometimes fumbling or sometimes coming down. So if I give you a price of maybe 900 for Jubilant, I'll go and buy. It may sound funny today. That's what 300 in Yes Bank was sounding funny when the stock was at 400, but it's come to 300 today. So I think Jubilant has been a rank outperformer, has been a favorite of market men, of most market men, I would say. There are the critics who say the stock is expensive. I'm not saying the stock is cheap. I'm saying the business is good, it's going to keep on growing. The balance sheet size is going to keep on growing. This stock, one fine day, maybe 1400, 1600 over the next 12 to 18 months, certain. But considering the run-up the stock has had, honestly, in this market conditions, I would allow the stock to share 10 to 15 to 20% before I would say investors go and buy the stock again. I have liked the stock from the time it was 400, 450, and I thought the opportunity came just a few months ago when people were sounding negative and the stock had come down all the way to 700, 750. 700, 750 becoming 1170 now, 1150 now. To go and buy it, what am I buying it for? For earning 100 rupees on this investment? Answer is no. Better allow it to come down and then go and buy it. Answer is be patient. You'll get the right stocks at the right price, then only go and buy.
Deepak, but what should be a broader strategy for trader for next 4 or 5 days? Since market conditions technically are not favorable for bulls, scales are clearly tilted in favor of the bears. Do you think traders, they should now start selling strength as well?
I think let's first divide the market participants into two categories. Those interested in the near term, the very short term, say a week ahead or even day traders, versus those who are long-term investors. And then the strategies become very different. For a short-term trader, currently the trend is pretty much down, so he would look for short-term trades, but not into strength. The stocks that are weak are obviously the best short sales right now. As far as a long-term investor is concerned, I think a lot of the stocks which are significantly above December and have corrected and fundamentals are decent enough, those I think it's time to start a little bit of cherry picking right now. So that would be the broad strategy. Two different strategies for two different type of people really.